what's coming up on the show. The World Bank is upgrading its 2025 growth forecast for Sub-Saharan Africa, now expecting 3.8%, up from 3.5% as inflation cools and foreign exchange stabilizes. Angola goes big, returning to international capital markets with a new 5- and 10-year dollar bond. What does this mean for its debt burden, investor confidence, and Africa's emerging markets? And gold hits an all-time high still. Momentum holds amid rate cut hopes. It's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with oil prices now. Largely holding a steady there. It was more volatile earlier. They were looking for direction, and we're still seeing that play out there. $65.38 a barrel. That's what's trading for Brent. Right there this afternoon. WTI, that's $61.59 a barrel, 0.16% down. We'll see if $60 holds, but I guess this has been the trade for a couple of months now. 60 still holds, but hard to break over $70 per barrel. We'll still keep tracking that. Now, we'll see the World Bank has revised upward its growth outlook for Sub-Saharan Africa in 2025, raising the forecast to 3.8% from its earlier estimate of 3.5%, citing easing inflation and stabilizing currencies across the region. The institution expects momentum to build further over the next 2 years, projecting average growth of 4.4%, but also flagged risk linked to high debt, trade uncertainty, especially with U.S. policy shifts, and the urgency of generating jobs for Africa's growing youth population. So that's the forecast right there for Sub-Saharan Africa. Then back at the African Development Bank, they revealed plans to lend $500 million to Nigeria in 2025 as part of a $1 billion budget support program in the backing President Bola Tinubu's sweeping economic reforms. The funds are expected to bolster fiscal stability and support strategic sectors like power, public finance, especially as Nigeria seeks to sustain investor confidence, amid ongoing reform efforts there. Then in Angola, they're making a return to the global bonds market, unveiling plans to issue 5- and 10-year dollar-denominated bonds with tentative yields of around 9.75% and 10.50% respectively. The move is part of the government's 2025 financing strategy, aimed to raise about $6 billion via debt instruments to help cover its total projected financing needs of $14.9 billion. All right, let's head to our first conversation now, and it's still in Angola. As Africa's digital economy, that's gathering space, Angola is emerging as one of the continent's most intriguing new destinations for digital infrastructure investment. Once known primarily for its oil wealth, the country is now attracting global attention for its push into data connectivity, cloud services, and large-scale data centers. Let's talk to Maria Pinto now, General Manager, Raxio Angola, joining me via Zoom. Good to have you on the show.
Hi, everyone. Good afternoon.
Good afternoon. So why is Angola now attracting, attention as a destination for digital infrastructure investment? What's changed?
Yes, first of all, thank you so much for having me. It's a pleasure to be with you. Angola is a country very reliable when we talk about infrastructure, digital infrastructure investments, and also affordable electricity, because we have at least 60% of renewable hydro energy. In plus of that, also the government started implementing new kind of energies with a lot of photovoltaic panels, and the engagement of the government, because we have a youth population. So the way the government is reforming and making easier the investment for the private sector, looking for the digital services is amazing. So everyone has mobile, everyone is driven by mobile, the payment system, so everything now is doing with the finger. So the Angola environment is very interesting in kind of technology. So, and that is the point. And also, we belong for a group, now is the 6th country. We'll start the 7th in the beginning of the year. We have already operation in Uganda, Cote d'Ivoire, DRC, Mozambique, Ethiopia, and now Angola. What we have proud is our facilities is a tier 3, world-class tier 3. So we can provide 100% of redundancy and 100% of our best services in the best in class. So we are in Africa, but proudly Africans doing the best we have in the world. And of course, because of this environment, we have the platform in the back end with investors, institutions, looking for the corporation, and the International Finance Corporation is one of them, and is part of World Bank, and of course is a bridge for us and to make Angola and Africa being in the globe for the best practice in data centers.
Right.
And the rest.
Right now, we can't, have conversations without talking about artificial intelligence and, data centers. But what were some of the, specific enablers or, challenges of building a large-scale, data center in Angola?
You know what is funny? We have banks. Banks is amazing. The support, first of all, the support of the government and the way we are being supported and being involved with government in this project is amazing. So this opened the proximity for another level, the high voltage grid, the signals for telcos, the banks, and even the enterprise. And what is interesting, sometimes when we travel a lot from Europe and we see the banking system in Angola is in the same level as Europe. So even better, because the payment system is amazing. So the banks are high-tech technology in their infrastructure, even hardware or even software. So it's a very interesting market. Of course, we have challenge, for sure. And we try to look for the bottlenecks as lessons to learn and try to surface that obstacles. But is amazing the enablers. And even in kind of sustainability, we can also say we have in our data center, we have 70% of recycling. Okay, the water, we have the treatment station of water to make all the water treatment. So we have all the ingredients to a large-scale data center in Angola. So we are very proud. We can imagine how our event, the launch event was. The impact was huge, and we are anxious to start with all the power. Basically.
Fantastic. That's, definitely a good, commendable one, there. But how does, Angola compare to, other African markets, in terms of, readiness for that digital transformation?
I'm a proudly African, I'm a proudly Angolan. So if you ask me that, of course I will tell you, it's amazing. But Angola is still emerging, okay? Is a country need a lot to learn, and they know what is interesting is emerging, but is catching very fast because we have a lot of young people looking for the project, winning international prize around the world to be in the first step for the digital transformation. Of course, in Africa, we have always challenged, like I mentioned before, but we are catching up, and that is very, very interesting. And open access for the infrastructures like ours, and looking for out of box is my style. So Braxio is also this style too. It's very interesting because put you not only Angola, because I want to look Angola as an hub and looking for Africa, because sometimes I think the people outside is very unfair with what we can do. So that's the reason I'm a proudly African, fighting for Africa and putting Africa in the roadmap. And with Angola, it's the same, because sometimes we say, okay, it worked for skills and so, but my team is 100% Angolan. So, and we have our workforce there. So sometimes, like I used to say, is we need to have the capability to dream and to understand we can do it. So let's do it. Let's start something different. So I think it's the beauty of Africa. We can do things, and dreaming, we can be the better. So that is our motto in Angola. Don't stop, just start. And
Don't stop.
that is the point.
Fantastic. Great mindset there. And I guess that's what Africa needs, at this time. Don't stop, just start. So what role will you
Yes.
say Angola, what role do you see Angola playing, in this region's emerging digital ecosystem, in your opinion?
I used to say Angola is a big garden planted next to the sea. So with all the benefits of that. And one of that is the coast position and the multiple submarine cables we have surrounding our coast. So we are a strong candidate for the regional connectivity. So that is one of the biggest points on this business. Of course, we are a carrier neutral. So we are open to all networks. We are the first ones in Angola doing these kind of things, to be neutral, be home for everyone. So we can host the national IXPs and even improving the domestic and the cross-border routing. So we are completely open to that. Our digital economy in the Southern Africa is also growing. So Angola is in the borderline with the southern for the Central Africa too. So we can easily be a hub for the data and the cloud. We are in the middle, so we can play with the north, with the south, and doing the things work. So that's our position and our role.
Right, I guess you have an advantage there, being in the middle, so you can serve most parts of Africa. But thank you so much. It was great to have your perspective. We do hope we get more data centers built in Africa. Thank you so much for coming on. Maria Pinto, General Manager, Raxio Angola. Thank you so much for coming on the show today.
Thank you so much. Thank you.
All right, let's flip over to what's playing out with the markets that we track now. We're looking at metals now. Gold still around those record highs at this point. No signs of reprieve, right there from the impasse between the two houses of U.S. Congress. So we're seeing, some investors piling to, the safe haven trade there, 0.10%, $3,965. This has been described as, gold is flirting with that $4,000 level at this point. I guess it might hit soon. We'll keep tracking that. 1.30% up. That's what we have for U.S. gold futures. $3,988. For spot silver, of a pullback there. Platinum pullback, 0.28%. But spot silver still looks like it's on its way to hit that $50 level per ounce. And palladium up 0.85%, $1,360. But looking at it from a historic point of view, we see gold definitely up about almost 50%, nearly 50% up, so far in 2025. Put that up there, January to October, about 48% up year to date. And definitely quite an impressive move. It's not been seen like this in a while. And, definitely investors are trying to understand, what's really happening here. We have gold going up. We have risk assets also rising, at the same time. But let's find out, what to expect. Let's speak to Tomiwa Jawolena, analyst with financial derivatives company. It's still the gold trade at this point. So talk to me, what is this gold surge? What does it tell us about the current state, of the global economy and, investor sentiment?
Hi, Larry. Good afternoon. Thank you for having me. I think first it's important to reiterate the fact that gold is a safe haven asset. And when you have the global safe haven asset rising 50% in a year, having an annual gain that's not been seen in 46 years. And since March, that has just been breaking record levels, 42 times we were counting. So it says a lot to the level of uncertainty in the global economy. And, we can just take an example, the most recent one that's pushed it up in the past 2 or 3 days. We have the US government shutdown. And because of this, we won't be able to have access to some job reports, some data that the Fed needs to analyze to make some interest rate decisions. And this is increasing the level of uncertainty, because if the Fed cannot make the right decision, to be able to make, especially in the current situation where the Fed, has pivot to monetary easing and where we're having lower interest rates. And lower interest rates typically reduces the value of the dollar, which is making investors skeptical. And so we have to run to gold. And I think it just shows the level of uncertainty in the global economy. Even if we go away from the US, we go to France, where there are a little bit of political interactions, and then even we go to Japan. So we're seeing at the global level a lot of uncertainty, and also we're seeing geopolitical tensions also feeding into it, because dollar has always been the world's global currency, and now we have the dollar weakening by 10%. So gold is also a store of value, and if you want to make sure that your assets are still good value and not affected by inflation, investors are running onto gold. So that is why we've seen a huge surge into gold in this year, and forecasts are expected to reach about $4,600 per ounce this year. So I think, but there's also the risk that it will come down. There could be some profit taking, so needs to be navigated easily.
Right. I guess we can call 2025, with this rise, the golden year, at this point. But we see, Goldman Sachs, they've raised their 2026 gold price forecast by an additional 14%, citing robust demand, from central banks, in Western countries. But I'm wondering what happens if this global demand begins to cool. I guess that's lower prices for gold.
Sorry, come again, I didn't hear that.
So I'm saying if demand cools, from what we're seeing from the central bank.
Yes, we're seeing. So right now, demand is actually still rising. As I said, because the uncertainty level is increasing, but there are risks that demand could fall. But now we're looking at the fact that the U.S. Fed is likely to is pivoting to a monetary easing cycle, which is likely to weigh on the dollar. The dollar is already 10% this year, so if the dollar is going to weaken further, that is leaving more room for growth, because the dollar and the growth have an inverse relationship. So in the near term, we expect that the gold prices will definitely still increase because there's increasing demand for it. Global central banks, as I said, are also pivoting away from dollar because of the increasing geopolitical tensions. We're having tariffs up and down, and you have to make sure that your financial assets are are secure. So in the near term, yes, we're still going to see high demand for gold.
Tracking that, thank you so much, Tomiwa Joele, the analyst with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's, I guess, get a check on other markets, that we track at this time, talking about the African continent. Definitely we see the NGX down 0.13%. The Johannesburg Stock Exchange still around, highs there, 109,000, about 4 basis points down. So we're seeing pullback there between the NGX and the Johannesburg Stock Exchange. Let's get a check now on North Africa. That's the EGX 30 and what's playing out in Kenya. If we put that up, yeah, see EGX 30, just marginal rise there, near flat at this point. The Nairobi Stock Exchange, though, closed strong negative yesterday, 0.47%, down 177 points for the Nairobi Stock Exchange. Let's get a check now on the Gulf region. We see it's mostly positive sentiment right there in the Gulf region. We see in the UAE, the Dubai index 0.59% up, Abu Dhabi index 0.21%. Then for Saudi Arabia, Qatar, we also see positive sentiment there. But for our viewers on DSTV, we're going to join a live coverage now. A rehabilitation of the old Kefi Road from Kado Village to Dede Junction. But you can keep following the money on other platforms at this time. All right, let's get a check now on what's playing out in the U.S. We see the stock futures were relatively unchanged today. Wall Street is looking for more developments out of Washington on the current U.S. Government shutdown that is now in its second week. But the tech-heavy NASDAQ looking better. That's a 0.71% of the Dow Jones Industrial Average futures. That's down 0.14%. S&P futures 0.36%. Up. Take it on to Asia now. We see Japan's Nikkei 225, that paired some gains to close at about 47,950 points. After hitting a record high earlier today for the second straight session, the index was lifted by a tech rally, on Wall Street with a major deal between OpenAI and AMD seen as one of the most direct challenges yet to chip maker giant NVIDIA. So we see Kospi, a big 2.70% uptick, 3,549 points. And the Hang Seng Index, that closed down 0.67%. Let's get a check on India now for the Nifty 50. That's still continuing in positive territory, 25,108 points, 0.12% up. And the Shanghai Composite, 0.52% up. All right, let's take it on to Europe now. I will see the European Commission is expected to double tariffs on steel imports to 50%. That's today, and according to media reports. But join us now to bring us up to speed. We have Chiponda Chimbelu right there in Berlin. Great to have you, Chip. So, what is the EU planning?
Thanks for having me. Well, Laddie, the EU is planning to double its tariffs on steel imports to 50% from 25%. And it also plans to reduce steel import quotas. So that is the amount of steel that is allowed to be imported into the bloc, and it will reduce that by about 50%. Now, that's according to a couple of media reports that are citing a draft proposal by the European Commission. Now, this move will help the European Union counter any dumping as a result of excess supply due to steel being redirected from the US market because of the Trump administration's 50% tariffs on steel imports there. Now, here in the EU, the European Steel Association, Eurofur, has been pushing for measures to protect the bloc's steel industry against foreign competition. Now, the current safeguards are set to expire in the middle of 2026, so the EU does need to come up with new rules for steel imports if it wants to continue protecting the bloc's steel industry.
All right, so which countries could lose out from the new rules?
Well, China especially, because it has been subsidizing its domestic steel production. Now, the EU and other Western countries are trying to contain excess capacity in steel supply, and that could reach 721 million metric tons in 2027, and that's according to figures from the OECD. But it's not only China that will lose out. The UK too could lose out from the EU's new rules. Now, the European Union is the biggest market for British steel exports, with about half of the production being exported to the bloc. And that's around 1.9 million tons. And that amount is, of course, significantly higher than the 200,000 tons that the UK exports to the United States. So this move by the EU will definitely hurt the UK more than the Trump administration's tariffs on steel. And that, of course, we have to look at because it will also perhaps have an impact on EU-UK relations. As we do know, in recent months, Brussels and Westminster have been drifting closer.
Right, I'm talking about relations. How could it affect, EU's relations with its biggest partners?
Well, Laddie, this move will bring the EU's steel tariffs in line with the Trump administration's, and it means that the European Union and the United States may be moving closer to forming a metals alliance. Now, that was an idea that was mentioned in the summer during trade negotiations between Washington and Brussels. Now, the EU and the US want to work together to mitigate the impact of subsidized Chinese metal production on global markets. Now, while the new tariffs will go down well in Washington, that of course won't be the case in Beijing. China will likely see the EU's tariffs as another restriction on free trade. And because it is one of the EU's biggest trade partners, it does also have the muscle to respond. Now, relations between Brussels and Beijing have, of course, soured in recent years, so they could very well take a turn for the worse.
All right, thank you so much, Chipana Jibelu there, bringing us the details of what's playing out in Europe. We'll get more updates from him tomorrow. Let's get a check of what's playing out in the crypto market now. Let's look for the color. Right now, we did see the markets are trying to continue with those highs we're used to at this point. We see Bitcoin holding up $124,000. Ethereum leaving that 4,500 level, now holding up at 4,700. BNB, I guess this one is in price discovery. At this point, hitting up $1,313,000. Let's get a check on some of the top news in the crypto space. Now, we see the Nigerian House of Representatives, they've announced the formation of a special ad hoc committee to scrutinize the risks tied to cryptocurrency and point-of-sale operations, citing rising concerns over fraud, cybercrime, and regulatory gaps right there. Then outside our show, we'll see Intercontinental Exchange, ICE. That's the parent company of the New York Stock Exchange, NYSE. They're planning to inject up to $2 billion into Polymarket, the decentralized predictions market platform, valuing it at around $8 billion pre-money. The investment marks a bold institutional bet on crypto-native infrastructure returning to prominence, and it comes as Polymarket gears up to re-enter the U.S. market after years of regulatory uncertainty. Also, we see XRP, long among the top 3 cryptocurrencies by market capitalization. That has been displaced now by Binance's BNB. Surge past it, pushing XRP out of the top 3 right there. If you're familiar, with CoinMarketCap and the cryptocurrency market, normally most of these digital assets sometimes they flip each other. Some expect that at some point Ethereum might flip Bitcoin, but that has never happened. But we see other, altcoins there, outperforming each other when it comes to market capitalization. So the latest one now, BNB, outperforming XRP right there on CoinMarketCap. Well, thanks so much for watching. Those are the top stories in the major markets, making moves today. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our shows. Thank you for watching. I'm Ladi Williams. Bye for now.